Oh, all right. Good afternoon, gentlemen. You are welcome to the Nigerian Bar Association Warri Branch webinar series organized by the Continuing Legal Education Committee of the branch on the topic, the Nigeria Tax Act 2025, understanding the Nigeria Tax Act 2025, the myth and the reality. Before we commence, we'll invite our chairman, Mr. U.E. Ukbakbo, the chairman of the NBA Warri branch, for his opening remark. Thereafter, we can now move on. So over to you, Mr. Chairman.
All right, thank you very much, Dr. S.J. Dagbonovi. Gentlemen, you are welcome to this webinar program. This is the first part of the two series that we are going to organize for today and on the 22nd of this month. Like as Dr. S.J. Dagbonovi has rightly said, the topic for this webinar program is understanding the Nigerian Tax Act 2025, the myth and the reality. We have a panel of seasoned speakers made up of Mrs. Efemena Adeyeri. She's a legal practitioner of the Delta State Board of Internal Revenue Service, and also Dr. V.F. Origo, who's a chartered accountant. It's obvious that these seasoned speakers will do justice to this program. Now, this topic is very auspicious, considering the fact that by the beginning of next year, January, the Tax Act will come into force. And there's a need for us to have a bit of knowledge of what is expected of all of us as Nigerians. And so it's going to be very educative, very enriching, and I have no doubt that the people that we have on board will do great justice to the topic for which we have chosen. So, gentlemen, I welcome all of us to this webinar series. It's, like I said, it's of two parts. Today's own and the one that we also do on the 22nd of this month. That will be the next Monday. So I will give the mic to the anchor, our Reverend Dr. S.J. Dagbonovi, who will anchor the program, and for the speakers, do justice to the topic which we have chosen. So thank you very much and welcome.
Thank you, Chairman, for that brilliant welcome remark. And now, as the chairman has remarked, the Nigeria Tax Act 2025 is part of the most comprehensive overhaul of Nigeria's tax system in recent time. As we all know, it also has its challenges, criticisms, as it relates to the minimum tax and expanded scope of personal taxation that has actually sparked some concern in Nigeria. Well, I will now be inviting the speakers at least to do justice to the act and also to give us insight and understanding into the law. But before I do so, please permit me to introduce our speakers to our audience. First, we have Efemena Adeyeri, a distinguished legal practitioner from Isoko North Local Government Area of Delta State. She is an assistant director in the Ministry of Justice, Delta State, and head of legal unit, Delta State Internal Revenue Service. She has pioneered and resolved several tax disputes for the Delta State Internal Revenue Service. She's a holder of LLM, Distinguished Member, Chartered Institute of Mediation and Conciliation. She's also an associate, Chartered Institute of Taxation of Nigeria. She's married with her children. Mrs. Adeyere, you are welcome.
Doctor, thank you very much.
We also have our very own VF Origo, AC, a PhD holder, a senior manager, tax and regulatory service with Mabamije and Co, chartered and forensic accountants. Dr. Origo, you are welcome.
Thank you so much, sir.
All right. Now, we are aware of the position on ground, just as stated by the chairman of the branch, that by 1st of January 2026, we are now going to be confronted with a new legal tax regime, which has thrown a lot of Nigerians, including professionals, off balance, perhaps as a result of lack of understanding. Therefore, Mrs. Adeyere,
Yes, please.
can you now lead us into understanding its Nigeria Tax Act 2025?
Without pleasure. Okay, so firstly, I would like to say thank you very much, Chairman NBA Warri Branch, for this opportunity, and to the chairperson of the CLE committee, Warri Branch, thank you very much. It's indeed a privilege, you know, having me here this afternoon to share my knowledge on taxation and my experience with our dear colleagues. And so firstly, I would want to start by letting us understand in the simplest way possible what tax is all about. What is tax? Tax basically means, monies, levies by the government to individuals, to corporate bodies, to enable the government fund their public projects, public spending, like the building of public hospitals, public schools, construction of roads, and all of that. The monies recovered from these taxes are get towards, carrying out all of these projects for the government. There are different types of taxes accruable to the 3 tiers of government. And this is backed all by the provisions of the Constitution. Section 4, sub 2 of our Constitution gives the government the right, the legal standing to levy these taxes on individuals and businesses, okay? Like I said, the 3 tiers of government have taxes that are accruable to them, liabilities that are accruable to them. For the federal government, prior to now, we had the customs duty, we had the export duty, we had the stamp duties, we had the company income tax, we had the petroleum profit tax, we have the capital gains, and so on. These are revenues or taxes that are accruable to the federal government. And then we have the state. For the state government, there are also taxes that are accruable to them. We have the indirect taxes and the direct taxes. The direct taxes come in form of the personal income tax payable by directors of businesses. And then we have the indirect tax in form of the payee, which is payable by the employer on behalf of the employee. And then you have the withholding tax for individuals. We also have taxes accruable to the state, but in individual capacity. We have the capital gains tax, but in individual capacity, we have stamp duties. In individual capacity, business premises, vehicle taxes, betting and lottery duties. these are some of the taxes that are accruable to the state. And then we have for the local government. For the local government, we have, obviously, we have taxes accruable to them as well. And then we have the tenement rates. We have tenement rates. We have signage and advertisement, market stall fees, licensing fees, and all of that. And so there was need to, bring all these laws into one uniform law. Because prior to now, we had so many laws scattered across in different documents, okay? If you had to do anything that had to do with your personal income tax, you go look for the PITA, the Personal Income Tax Act. There was the Stamp Duties Act. And so there was need for all of these laws to be unified into one document. More so, we had so many outdated laws still operational. Like the Stamp Duties Act came into effect in 1936. Okay, outdated laws, and there was need for these laws to measure up to globally accepted laws, and so there was need for the reform. And in August 2023, the president set up the Presidential Committee on Fiscal Policy and Tax Reforms, and they began to work on so many things, not singularly tax reforms. There were also other fiscal policies that were being looked into by the committee. And then in June 2025, some of these bills were passed into laws. Okay, and it is not just the Nigerian Tax Act. Okay, they are in four different laws that will come into effect come January 1st, 2026. The first of which, the Nigerian Tax Act. And then we have the Nigerian Tax Administration Act. And then we have the Nigerian Revenue Service Establishment Act. And then we have the Joint Revenue Service Establishment Act. All of these laws will come into effect come January 1st, 2024. Like Dr. SG said earlier on, this training is going to be in two parts. So today we'll be looking at the four laws, and then we'll try to demystify some of the myth around this new law that is going to come into effect. Okay? So that's what we're going to be looking at today. We'll look at the four laws, and then we'll take on the worries of the general public. And then come 22nd, we'll look at compliance as well as the administration of these laws. And so I would like to start by looking at the Nigerian Tax Act. As the name implies, this act basically consolidates key taxes. Previously, we had fragmented laws in multiple documents, and one had to gather different documents in order to answer one question. Okay. And so the NTA, that is the Nigerian Tax Act, has come to consolidate all of these laws into one single document. The capital gains tax, the withholding tax, the value-added tax, and others. It harmonizes different laws, different tax laws into one single document. And it has made it very easy, very understandable, such that any person can actually pick up the law and you'll be able to, figure out what exactly are your responsibilities to your state and to your country. It answers questions like, where do I pay my tax? Who do I pay it to? All of this you will find in the Nigerian Tax Act. This particular law addresses taxation of income of all categories of persons. And so as an individual, if you have questions on what you are to pay As an individual, you'll find it in the NTA. As a business, either trading in your personal name or in your business name, you would find answers in the NTA. If you are in partnership and all of that, any category of person, it will tell you what you are to remit to the government. It contains all tax obligations payable by taxpayers. It tells you as a person what you need to pay to the government. That is for the Nigerian Tax Act. And then next we have the Nigerian Tax Administration Act.
All right, Mr. Adeyeri,
Okay.
well, you will, let me stop you here for now. We will come back. Now, Dr. Rigo. Dr. Rigo.
Yes, sir.
Yes.
Yes, sir.
Coming to you now, Mr. Adeyeri has told us something about the NTA, that's the Nigerian Tax Act 2025, what to pay. Because every individual, okay, let me put it this way. There is this anxiety, there is this myth, there is this expression all over the air that every Nigerian has to pay tax. So, can you take it from there so that we want to know the perception on the law, the taxation of individuals, or what are the taxable income? So, please, can we hear you, sir? Take it off from there.
Okay, thank you very much. And thank you for the privilege to speak this prestigious webinar. When I was meditating, I was looking at the best approach to discuss with lawyers. You know, if I was discussing with people who want to write exam in taxation, I would have focused on the differences in the rates applicable. If I was to talk with fellow accountants, who would have looked at the Naira implication. You know, but when it gets to the lawyers themselves, I was wondering if I would be able to say subsection better off than the lawyers. You know, but I think my sister, Mr. Adeyeri, started on a very clear note of what taxation is and the relevance of the Nigeria Tax Act. You know, from 2020, we had multiple documents. You have the Finance Bill 2020, Finance Act 2021, you know, and it just kept running down like that. Sometimes it's just one line change. There's a Finance Act for that. You know, and that confusion, again, justify why there should be a consolidated document. So the concern from that document, if all Nigerians should pay tax, that was within even the old law. All incomes are subjected to tax. But what people are mistaken now is that there is a public narrative that is mistaking what income is, what inflow is, then what money in your hand is. So you see people being concerned about with my cash in hand or cash in bank or any resources in my possession be subjected to tax. The tax law is not charging tax on balances, on resources you are holding in trust. You are not taxing where you have principal agents and you are maybe receiving money on behalf of some other persons. The Tax Act is not putting tax on all of that. It is strictly what we have, similar with what we have in the old law, tax on revenue for the individual, then tax on profit for businesses. So the Nigeria Tax Act is a summation of the taxes, what should be paid. Then the Nigeria Revenue Service Act gives clear authority. Remember the River State issue then, if VAT should be collected by the state government, Internal Revenue Service, or if it should be collected by the Federal Revenue Service. So what has been done with the Nigeria Revenue Service Establishment Act, it gives clear power, clear direction of who to collect what tax and the responsibility of collection. Then the Nigeria Tax Administration Act It simply give coordination pattern to the tax collection, you know, and that introduced the fiscalization of VAT and e-service or e-invoicing system.
Dr. Ringo.
Yes, sir.
Yes, sir. Let me take you back to something you just mentioned now, which is quite agitating to my mind and to minds of other legal practitioners. You mentioned tax on revenue and tax on profit in terms of company tax. Then the individual is tax on revenue. Now, how do we determine, as for legal practitioners in private practice, how can the tax authority determine the revenue accruing to a private legal practitioner? Let me give you a practical instance first, before, so that you can appreciate the question. Assuming my client transfers this property, which is worth 15 million, to stand to pay, and the 15 million is sent into my account, and I have to do the business. Is at what point the taxing authority will tax the money? Is it when it lands in my account, or after the conclusion of the transaction? It is the profit that is accruing to me that will be taxed as tax on revenue for the individual. Thank you, sir.
Yeah. Thank you for that. You see, for legal practitioners and also for the accountant, license is given to the individual, not to a firm. So our operations are mostly within a business name. I'm coming to your question, but you see, that's why that campaign that some persons are saying, oh, let's all move to limited liability company, it is better off there. It's not exactly correct. What the law is looking at is not bank transaction. So taxation is not on your bank inflow, as it were. So if you receive money where there is agency of relationship, then a principal agent relationship, we are not the tax authority are not going to tax the principal sum. So if you come to that illustration you are giving her, it also provide within the law that talks about documentation. So it is expected that this relationship that warrants a transfer of 15 million to the legal professional supposed to go with a documentation. You know, within our space, we would have asked that you should have raised an invoice for it. And the invoice should have a narration. You know, so if we bring it to another illustration, for example, you are carrying out labor for someone, then you are having a markup on that labor. You are maybe supervising a building project, raw material costs, then professional service fee. You are doing documentation, printing costs, research costs. Those are direct expense. And the tax system is not taxing revenue without identifying or allowing the expense that is generated before the revenue is achieved. So if you have 15 million payment and there is expense on the 15 million, so say 13 million, what the tax will be on is 2 million naira and not the 15 million. Is that clear, sir? Your volume is out. I'm not hearing you.
Dr. Rino.
Yeah, there was a break there.
Can you hear me now?
Yeah, I can hear you now.
Okay, thank you so much for the explanation. And we'll come back to you, Jiffy. But let me quickly turn back to you, Mrs. Adeyeri.
Okay.
Yes, what do you have to say in this regard?
Okay, so your question had to do with how would legal practitioners be taxed.
Yes, professional in general, yes, and practitioners.
Like to by section 200 of the NTA, it defines who a professional is. And it clearly provides that professional persons are not a part of, cannot be termed small business. So persons who provide professional services cannot be termed as small business. So that one, we do not fall into professional services providers, do not fall within the purview of that small business. Section 147 of the NTAA defines small business. It says it means a business that earns gross turnover of 50 million naira or less per annum, with a total fixed, it's actually 100 million, because there's a little bit of controversy with the NTA and the NTAA. The NTA says 50 million gross turnover, and the NTAA says 100 million. And where there is any discrepancy as to figures, it will be determined in favor of the taxpayer. And so, by this new law, until it is resolved, the bracket for small businesses is 100 million. And if you've been listening to a lot of news, you will hear that. He did mention that a lot of people are saying, go register a limited liability company, because the threshold is 100 million. Okay. The law further says, provided that any business providing professional services shall not be classified as a small business. So legal practitioners, you are not small. Okay?
Are you saying we have businesses?
Yes. The law has said it, that professional services shall not be classified as a small business. So what determines whether or not you're a small business is whether you have a turnover rate of 100 million or less per annum, or if your total assets is fixed at 250 million naira. Okay, that's what determines. And so for people who think that it is better to register limited liability companies, I've seen a lot of opinions fly out there. But the truth is, I can tell you from experience, what we have currently is this. You have a limited liability company. You pay your company income tax to the now Federal Inland Revenue, that will soon be the Nigerian. Okay, so you pay your company income tax to the Federal Inland Revenue, which would now be the Nigerian Revenue Service. Okay, come 2026. But then it does not preclude you from making your personal income tax payment to the Delta State Internal Revenue Service. Why is this? Because in law, we already know that there are two different persons. Your company is one person. The individual is one person. So having remitted your company income tax to the Nigerian Revenue Service, you would also make your personal income tax. You would then affix it into the brackets. We'll come down to the brackets very soon to tell you what is payable by each individual and what the range is. Okay, so you pay your personal income tax as someone who earns from the business, and then you also remit your company income tax. So for lawyers, it depends at the end of the day on what you have made as profit at the end of the year. And these monies are taxable after you remove what we call the deductibles. Okay? The law makes provisions for you to, remove your expenses. So your expenses do not form part of your taxable income. It is after you have made all these deductibles, whatever is left, you fix it into the tax bracket. We'll come into that very soon, the tax bracket. And then you see where you fall under, and then you make your remittance to the state.
All right. Thank you so much. Before we proceed, dear participants, please, we we upload the attendance form in the course of the webinar. You will fill it and submit it back to us. So just watch out for it. Now, Dr. Rimu.
Sir.
Okay, yes. Your form is to enable you to earn your CLE point. Please, if you don't feel it, we might not be able to process it with the MD National. Now, Dr. Rimu. All right, before I get Dr. Rimu,
Yes,
this is Adeyeri. I will come back to Dr. Rimu. You mentioned that professionals, including lawyers, they are in big business. Now, what is the implication of that for professionals and lawyers? Is it that they are going to pay more tax? They are going to pay higher taxes? Or they will be taxed in a manner that is friendly or comparable to their colleagues in public service?
Okay, thank you very much for that beautiful question. One of the objectives of this new law is to reduce the tax burden on small businesses, middle class earners, okay, and focus more on high income earners. That is one of the main objectives of this law. And for lawyers, we offer professional services, like I said. And so what determines it does not mean that you're going to pay more taxes. No, that is not it. You would even find out at the end of the day that you are paying lesser taxes. And that's the honest truth. Like I said earlier on, it is dependent on how much income you have made for the year. Okay? So maybe now would be the right time to talk about the band, the tax band. Okay? The law says that if you're earning 800,000 naira, which is more or less, the minimum income wage, you are preempted from, you are precluded from making any remittances. You are not to pay taxes.
Okay, that's an exemption.
Yes.
For those 800 below. Oh, okay.
Say for persons earning 100,000. After you are, like I said, if you remember, I said earlier on that payment of taxes.
But is that per annum or monthly?
Per annum.
Per annum.
Per annum.
Okay.
And so this 800,000 naira for persons even earning like 1.2 million naira per annum.
Yes.
You would first deduct your expenses from the cumulative income that you have made. The law does not, this new law does not allow for housing allowances, for taxes for housing. It is deducted from it for persons who are in this NHIS, medicals, insurance. There's a relief on rent, a 20% relief with a 500,000 naira benchmark. All of this, if you are someone if you are a tenant who pays rent, you will take all these things into cognizance, and all of this will be deducted from your annual income. Then whatever is left, you will not affix into this tax bracket.
All right. Now, Ms. Adeyeri, you thank you so much. When you say 500,000, is it bound? What did you use? We use a language. Is it that is a maximum?
For the rent relief,
yes.
Yes.
Okay.
For example,
all right.
If the 20% is higher than 500,000 naira, you would only deduct 500,000 naira. But if your 20% is within that 500,000 naira bracket, that is what is happening. It gives you a relief of 500,000 naira as a tenant. It also considers transport allowance. So all of this you will deduct from your annual income, and then you make your remittances. So for the first 800,000 naira you have for your income, it is the first 800,000 naira is not taxable. Then the next 2.2 million is taxable by 15%. Okay, we're talking about the tax band now. And then the next you have is 2.5 million. Sorry, the next band is within 2.2 million and 9 million naira. That is it. If you're earning between that range, you're taxable by 18%. And then from 9 million to 21 million to 22 million, you're to pay 21%. And then from 21 million to 25, you're to pay 23%. And then from 25 million and above, you're to remit 25%.
All right. All these percentage, are they monthly or per annum? Per annum. Now, Dr. Rigo. Dr. Rigo.
Yeah, yes, sir. Yeah.
Thank you, Mr. Deyeri.
Thank you very
Dr.
much.
Rigo.
Yes, sir.
Is he hearing me? All right.
Yeah, I'm hearing you.
Now, I'm going to
You're breaking.
under this new tax regime, the computation as to the deductibles or the declaration of the income, whose duty or responsibility to do that under the law?
Okay. Thank you. Just to give clarity to something I was saying earlier, is that the small business bracket for professionals, most of the regulatory agency for professional service give licenses to individuals. So when license is given an individual name, the legal structure for registration in that circumstance will be a business name. So I don't know what is applicable for the legal profession, but in the accounting profession, what we have is mostly business names. So if the threshold is 100 million for small business, what the law was mirroring is limited liability company. So that's why it's clearly stated that this is not applicable to professionals, because the professional practice legal registration mostly is with the individual, then the registration type mostly also is with business names. So if your registration is a business name registration, that means you are not clearly separate from the business. So the income of the business name is seen from the eyes of the law as the income of the individual. So the individual will not say, I made less than 100 million, so I should pay 0 rate. That's not applicable. So if the individual made any amount of money within the tax band that is taxable, then he's taxable on that band. But again, the law also provided that the individual will have expense on revenue. So those expenses are liable. Again, what is liable is also defined within the act. So if the deductibles are subjected to the revenue, then the profit or the excess from that for the whole year is now what is subjected to that individual tax of 800, 2.2, and so on. Then the law also provided for self-assessment in the administration of the tax. What that means is that you report yourself. There's a new line of provision that says, as an individual, you must declare your income to the state board, all income to the state board. As an employee, your employer is also declare all payments and benefits to the employee to the state board, what we call the annual return in January. So if you declare your income to the state board, then it is on that declared income, not declared revenue, not declared inflow. It's on that declared income that is not subjected to tax. So there is a self-assessment. It is used assessing yourself to say, I did a transaction of 50 million. Out of the 50 million, what is income for me is 5 million.
All right.
The law also provide for administrative assessment. So the tax authority can also come to you to verify what you have declared under the self-assessment. So where there are variants, then the law also provide for additional assessment.
All right. Not all. Now, please let me still come back to you. You have said it is the duty of an employee or an income earner to disclose his income to the government or the authority. Now, the question is the deductibles. Who determines it? Who fixes it? Is it the employer or the income earner, or the employer, or the taxing authority?
You know, all expenses that are exclusive and wholly incurred in generating a revenue is allowable as a deductible. For example, if we pick a legal professional bank account and we are seeing school fees payment, you cannot make that claim to say this is deductible. We are seeing a luxury trip that has no direction or relationship with your business. You cannot make that claim to say this is deductible. So the law says if it's exclusively wholly incurred for the purpose of generating a particular revenue, then it is allowable as deductible. So it's the business owner that give his deductible as part of his reporting to the state government. But in the government assessment, they look through your list again, and if some of the items you have included in your deductible are not allowed within the law, they add it back to your revenue and subject it to tax. Like what the illustration I gave now, school fees, those are not a business expense. If you are paying school fees for your children, those are not business expense. You know, so if you are deducting that from your business account, it will be added back. If you are having air tickets and the invoices you are raising are within a locality, for example, all your businesses was in data, then you have a lot of air tickets, foreign trips that cannot be traced to the revenue of your business, it will be added back.
All right.
I don't know if that answers the question.
Thank you so much. I will come back to you. But let me go to Mrs. Adeyeri. Before I allow this question, please let me inform the participants. The form, the attendance form, please fill and submit for the purpose of your point, your CLE point. Thank you. Now, Mrs. Adeyeri, is it correct that one of the objectives of this Tax Act is to eliminate multiple taxation in Nigeria?
Yes, you're very correct. Multiple taxation in the sense that there are some outdated taxes that were being collected before now. We have bicycle taxes. Are you aware of that?
Yes, yes.
Okay. So some of us,
I remember my father used to pay bicycle tax.
these outdated laws have been repealed by this law, which invariably means that we'll pay less taxes.
All right. Thank you. Doctor.
Yes, sir.
Please, some of the participants still want a rundown of the Nigerian Tax Act 2025. Thereafter, we will give room to look at the questions they are raising or they will ask directly. So, please, can you still give us a little rundown on the Nigerian Tax Act 2025?
Okay, I think my sister started that, and she was giving the justification for the Nigeria Tax Act. It's a robust document that unifies all taxes collectible by the federal and state government. What the Nigeria Tax Act did not do is that I'm looking for the best way to put it. What we have currently and any liability that anyone has with government currently, the Nigeria Tax Act is not abolishing it. The provision says it will be carried over. So if you have any liability to government under the current law, Nigeria Tax Act is not abolishing those liabilities. You know, so it's a unified document that gives a single source of truth in tax collection. I normally use this illustration in defining how the Nigeria Tax Act is going to solve a lot of problems. For example, if you have a transaction with a related party, let's give an illustration of a lawyer who is giving service to a relation, and his invoice for the service is 10 million. But out of benevolence from his own relation, he's paid 30 million. The 20 million excess on that value ought not to be part of his income. In accounting, we say the 20 million is a balance sheet item. It means it is director or owner of the business account inflow. But what we have currently is that if you are being subjected to tax, that 30 million will be subjected to the tax in the hand of the lawyer. Let's also assume that that 30 million was paid by a company. When government is doing their own assessment on that company expense, they look at the lawyer bill. The lawyer bill is stating 10 million. But they look at the evidence of payment or go through the bank statement of the company, let's say company ABC. Then they are seeing the payment 30 million. What the current law is doing, or what the current law has for that transaction, is that in the hand of company ABC, 20 million will be added back to their profit as disallowable donation and subjected to CIT. When it comes to the hand of the young lawyer who has received that money, his income subjected to tax. But what the Nigeria Tax Act has done is that it has taxes, then provide for government a single source of truth with the Nigeria Tax Administration Act. And that also means that government sees transaction with the digitalization of our system. Government sees transaction for what they are. So the 10 million lawyer bill is seen by government. The excess payment from ABC, maybe because it's a relation, is seen by government. So that double taxation will no longer be there with the Nigeria Tax Act. What the Nigeria Tax Act has also provided for is that I've talked about the savings that it carries over tax on the current system. Then it also gives an expanded tax power with the tax authority. So there's a broader definition of what income is, what profit is, what gains are. You know, then it also gives a provision for undistributed profit. If you look at chapter 2, subsection 10 of the Nigeria Tax Act, it gives the tax authority the power to distribute undistributed profit and tax it in the hand of the shareholders. You know, that also gives clarity to that earlier statement I made when I said the argument of whether to stay as an enterprise or stay as a limited liability company, which is better. If you have a limited liability company and you are making profit and you are not distributing the profit to the shareholders, then you are hiding under the threshold of 100 million and you are not paying tax. The law provides that the tax authority can, on their own, distribute the profit to the shareholders and notify the relevant state authority that this individual now have access to this fund. Then that fund is subjected to tax in the hand of the individual. You know, then it also expands, I use the word aggressive statutory administration. What that means is that before now, administration of tax was a lot of persons have a lot of places to hide. But now with the mandatory tax ID, whether that will be adopted, whether your NIN is tied to your tax transaction or your TIN, for those who have registered company, you know, so it gives an aggressive statutory administration to tax system. Then he also defined our timelines. You have a letter from tax authority, you will not respond in 90 days, in 60 days. Any day you wake up, you respond, you still get audience from the tax authority. That is no more applicable. From the tax authority to you, if you don't respond within 30 days, it is conclusive. If you write back to the tax authority and they don't respond within 90 days, that means your position is also conclusive. So it gives very clear vision for timeline in tax.
Yes, sir. Come to that area which is compliance by Monday. Now,
okay.
Thank you so much. Let me take few questions from participants, then we'll continue. I will come back to you, Doctor.
Okay.
Now, Mrs. Aderi, can you give us a general breakdown of the tax laws?
Okay. Thank you very much. Thank you very much. There are 4 laws that are going to come into effect come January 1st, 2024. And I'd talked about the Nigerian Tax Act, which I said basically came to consolidate, codify all of these multiple taxes we had before now into one single document. It also repealed some outdated laws, amended some as well. Okay, so I've dealt with the Nigerian Tax Act. Then we have the Nigerian Tax Administration Act. Basically, Dr. Origo had already, touched on it a bit. It provides a uniform administration procedure for the administration of taxes across all jurisdictions in Nigeria. So it mandates taxpayers to register. When we come to compliance, we talk more on that. Every business is mandated to register, to have what we call a tax ID, which formerly was known as the tax identification number. This is to enable everybody run their business smoothly. It takes care of the registration, filing of annual returns, assessment, tax audit, enforcement, and all of that. It also tells you how all the internal revenue services across all jurisdictions should be like, its composition and its operations. What does this mean? It means that if, as a Deltan, I go to Bayelsa State, what I'm seeing there should not be completely different from what is obtainable here in Delta State. Okay? It answers questions like, who is to administer these taxes? All of these you will find in the Nigerian Tax Act, Administration Act. It also makes provisions for offenses and its penalties. The offenses, penalties for offenses in this Nigerian Tax Administration Act is very stringent. And so when we come to compliance, we'll shed more light on it. That's for the Nigerian Tax Administration Act. And then we have thirdly, the Nigerian Revenue Service Establishment Act. This act repeals Inland Revenue Service and establishes the Nigerian Revenue Service, which is called the NRS. It talks about its composition. It empowers the NRS to